So welcome back, guys. What are we going to start today? This is another day at FOCAS 30. FOCAS 30. So far we have covered a lot of papers, starting from your advanced accounts, which was the first thing that we started. Adukapra audit pathom. We have also covered costing. We have covered taxation. So majority are 4 papers also we have covered. Yes, today what we are going to start with, we're going to start with the next important paper, which is a practical paper and a very scoring paper for you in your examination, financial management. That is what we are going to start with in today's session. So financial management, we are going to cover an important chapter called cost of capital. In your 50 marks, you can expect this chapter to come somewhere around 10 to 12 marks in the examination. So you're talking about a chapter which is going to cover 20% of your examination marks, right? Super. So just like how we did in costing, what we are going to do is we are going to cover specific sums from this chapter. So if I talk about cost of capital, I categorize sums into 5 different models, right? So the first model will be weighted average cost of capital computation, which is very simple calculations, plus infusion of additional funds. ரெண்டுத்தையும் ஒரே சம்ல அடிஷனலா டெட் கொண்டு வர போறேன், ஈக்விட்டி கொண்டு வர போறேன் அப்படிங்கிற மாதிரி சம்ஸ். அது கொண்டு வந்ததுக்கு அப்புறம் என்னோட வெயிட்டட் அவரேஜ் என்ன அப்படின்னு கால்குலேட் பண்றது ஒரு கேட்டகரி ஆஃப் சம்ஸ். இத நான் எந்த சம் யூஸ் பண்ணி கவர் பண்ண போறேன் அப்படின்னா, ஐ எம் கோயிங் டு யூஸ் question number 3 to cover the first model. Second model enna, we are going to compare two different sources and decide. Compare different sources of funds to choose which is the best. So this will be covered using question number 5. Next enna cover panna porom, fresh issue of funds from alternate sources. Like this is similar to question 5 but a little bit different. This we'll cover using question number 6. Next, book value method versus market value method. இதை பேஸ் பண்ணி weighted average எப்படி calculation மாறும் அப்படிங்கறத question number 13 பேஸ் பண்ணி கவர் பண்ண போறோம். Lastly, we are going to cover one question, this question number 16. This is a very comprehensive question covering a lot of adjustments. So இந்த 5 question நான் எக்ஸாம்க்கு முந்தின நாள் பார்த்துட்டு போனேன் அப்படின்னா, that is sufficient for me to secure a good amount of marks from the cost of capital related questions in your examination. So நம்ம காஸ்டிங்ல பார்த்த மாதிரியே டைரக்டா क्वेश्चंसக்கு போலாம். क्वेश्चंस பார்த்துட்டு அப்படியே ஆன்சர்ஸ் we can check how they are solving and we can proceed to the next question. Similar model. JKL Limited has the following book value capital structure as on 31st March 2018. Equity share capital 40 lakhs, 2 lakh shares, 11.5% preference shares 10 lakhs, 10% debentures 30 lakh rupees. The equity shares of the company are sold at rupees 20. It is expected the company will pay a dividend of rupees 2 per year, 2 per equity share in the next year, which is expected to grow at 5% per annum. Assuming a 35% of corporate tax rate, calculate the weighted average cost of capital of the company based on existing capital structure. Compute the new WACC. If the company raises an additional 20 lakhs debt by issuing 12% debenture, this would result in increasing the expected equity dividend to 2.4 and leave the growth rate unchanged. But the price of equity share will fall to rupees 16 per share. Very simple. Yes, super. So now cost of equity can a formula. Expected dividend, which is D1 by P0 plus G. Correct? This is the formula. So my D1 they've given you is rupees 2. P0 is 20. Growth is 5%. So my cost of equity will be 15%. Total equity that I have is how much? 40 lakhs. Total capital that I have is 80 lakhs. So என்னோட equity எவ்வளோ percentage? 50% is equity. கரெக்டா? So அதான் இங்க போட்டிருக்கேன். Equity 40 lakhs, 50% is 0.5 into 15% gives me a weighted average cost of 7.5%. Similarly, preference capital க்கு என்ன formula? Preference dividend by net proceeds from issue of preference shares. Net proceeds என்ன? எனக்கு கொடுத்திருக்கிற வேல்யூவே நான் எடுத்துக்கலாம். My dividend is 1,15,000. Net proceeds is 10 lakhs. So my preference cost is 11.5%. So 11.5 into 0.125 gives you 1.437. Next, debentures. Debentures interest into 1 minus tax rate divided by net proceeds from issue. This is nothing but 3 lakhs into 65% because 100 minus 35% divided by 30 lakhs. So this will give me 6.5%. They calculate பண்ணனா 2.438 வரும். So overall weighted average cost of capital for my company is how much? 11.375. Now let us see when they issue new shares, new debentures, what will happen? My cost of equity will change. Cost of preference shares will not change. Cost of existing debentures will not change. So equity change ஆகும், debentures change ஆகும். Equity எவ்வளோ change ஆகும்? My dividend expectation is going to be 2.4. My market price will fall to 16 rupees. Plus growth will remain constant. இதை calculate பண்ணனா my cost of equity becomes 20. So 20 into 0.4 gives you 8%. Similarly, 12% debentures 2,40,000 will be the interest into 1 minus 35% divided by 20 lakhs. This will give me 7.8%. Into 0.2 gives you 1.56. 0.1 into 11.5 gives you 1.15. 0.3 into 6.5 gives you 1.95. So my new weighted average cost of capital is how much? 12.66%. This is a routine, simple, straightforward sum for weighted average cost of capital computation, wherein already given numbers are available and also a fresh issue of debentures is made for us to compute the weighted average cost of capital. Now let us move to question number 5, where we are going to compare two different sources. Anona Limited is considering raising of funds of about rupees 250 lakhs by two alternative methods, which is 14% institutional term loan or 13% non-convertible debentures. The term loan option would attract no major incidental cost and can be ignored. The debentures would have to be issued at a discount of 2.5% and also involve a cost of issue of 2% on the face value. Advise the company as to the better option based on the effective cost of capital in each case, assuming a tax rate of 50%. Yes, super. So how much I require? 250 lakhs is my requirement. Term loan போனேனா எந்த டிஸ்கவுண்ட்டும் கிடையாது. இதுவே கன்வெர்ட்டிபிள் டிபென்ச்சர் இஷ்யூ பண்ணேனா எனக்கு எவ்வளோ டிஸ்கவுண்ட் இருக்கும்? 2.5% டிஸ்கவுண்ட் இருக்கும். ஸோ 250 into 2.5% gives me 6.25. ஸோ net proceeds from issue எவ்வளோ எனக்கு கிடைக்கும்? இன்ஸ்டிடியூஷனல் லோனா இருந்ததுன்னா 250 lakhs எனக்கு கிடைச்சிரும். இதுவே டிபென்ச்சர்ஸ் போறேன்னா 243.75 தான் கிடைக்கும். இதை தவிர there is a cost of issue also. இதுக்கு எதுவும் கிடையாது. இங்க எவ்வளோ? 2% into 250 which is 5 lakhs. ஸோ நெட்டா எனக்கு எவ்வளோதான் பைசா நிற்கும்? 238.75. இங்கே 250. Now interest it will be calculated on face value and not on net proceeds. Net proceedsல calculate பண்ண மாட்டேன். face valueல தான் இன்ட்ரெஸ்ட்டை நான் calculate பண்ணணும். ஸோ face value எவ்வளோ? 250 into 14%. 250 into 13%. How much will that be? 250 into 14% will give you 35 lakh rupees. Minus 2.5 gives you 32.5 lakh rupees. So now tax benefit is 50% for both the interests. So netta எனக்கு எவ்வளவு வரும்? 17.5 is my interest cost. இங்க 16.25. Yes or no? Now my effective cost of capital is 17.5 is my cost for 250 lakhs. So this is 7%. 16.25 is my cost for 238.75. Yes or no? So this will give me 6.81 percentage approximately. That is what they have calculated. So which is better? 13 percentage convertible debentures is better because it is giving me lesser cost than your institutional loan by 0.19%. So I should go for convertible debentures only. That is the conclusion. With that, the second question is over. Let us move to the third question. ABC Limited has the following capital structure which is considered to be optimum as on 31st March 2019. 14% debentures 30 lakhs, 10 lakhs and 1 crore 60 lakhs. So இதை இப்பவே நான் percentage calculate பண்ணனும்னா this is 80 percentage. This is 15 percentage. This is 5 percentage. The company's share has a market price of rupees 236. Next year dividend is is 50 percentage of 2019 EPS. The following is the trend of EPS for the preceding 10 years. It is expected to continue in the future. 2010 ல இருந்து 19 வரைக்கும் கொடுத்திருக்காங்க. ஸோ இங்க பாத்தீங்கன்னா 10%, 10%, 10%. ஸோ ஆவரேஜ் growth எவ்வளோ 10% இருக்கு. ஸோ GA indirectா they have given you 10%. Company issued new debentures carrying a rate of interest of 16% and the current market price is rupees 96. Preference share of rupees 9.2 with an annual dividend of 1.1 per share were also issued. The company is in 50% tax bracket. Calculate the cost of new debt, cost of new preference shares, new equity shares, marginal cost of capital when no new shares are issued. Compute the amount that can be spent for capital investment before new ordinary shares must be sold, assuming that retained earnings for next 9 years investment are 50% of 2019. Compute marginal cost of capital when funds exceeds the amount calculated in C, assuming new equity is issued at rupees 200 per share. Very simple. Cost of new debt in a formula: interest into 1 minus tax divided by net proceeds. So interest எவ்வளவு கொடுத்திருக்காங்க 16%. So 16 into tax bracket is 0.5. So 1 minus 0.5 divided by net proceeds எவ்வளோ 96 rupees. So my cost of new debt is 8.33%. Cost of preference shares, preference dividend divided by net proceeds. So preference dividend is 1.1 divided by 9.2. So simple and straightforward calculation of 12%. Cost of equity is nothing but D1 by P0 plus G. D1 எவ்வளோ கொடுத்திருக்காங்க 50% of 2019 EPS. So 23.6 into 50% gives you 11.8 rupees. So D1 is 11.8 divided by P0 எவ்வளோ கொடுத்திருக்காங்க 236 is the current market price. Plus growth, we just calculated it to be 10%. So this is 5%, this is 10%. Total cost of equity capital is 15%. So first the requirement of the question is over. Yes. Now I should calculate marginal cost of capital. இப்போதான் நம்ம மேல பர்சன்டேஜ்லாம் போட்டு வச்சிருந்தோம். எவ்வளோ 15, 5 and 10, 80 ஆல்ரெடி போட்டு வச்சிருக்கோம் கரெக்டா? ஸோ டிபென்ச்சர் இஸ் 15%, 8.33%, 0.125. Preference shares 5%, 12% is the rate of interest, 0.006, 0.8, 0.15, 0.12. So my total marginal cost of capital is how much? 13.85%. So this is over. C in how much can the company spend without issue of new shares? So how much will be my retained earnings? 50% dividend la போயிடுச்சு அப்படின்னா எனக்கு பாக்கி 50% will be my retained earnings. கரெக்டா? So there are 10,000 shares. என்னோட EPS is 23.6. அதுல 50% தான் retained earnings. So retained earnings is equal to 0.5, which is 50% into 23.6 into 10,000 shares. Sorry, 1 lakh ne 10,000 shares. So 23.6 into 10,000. எவ்வளோ shares? 1 lakh 10,000. 10,000 shares தான். So just a minute. How much shares, how much value I'll be having? Equity or value எவ்வளோ இருக்கும் என்கிட்ட, பாக்கி 50% dividend கொடுத்துருவேன். So 50% into 236 rupees per share into 10,000 shares. I will have 11,80,000 rupees. So 80% of total capital should be 11,80,000. கரெக்டா? ஏன்னா எனக்கு அதே லெவல்ல ரீட்டைன் ஆகணும்னு சொல்றாங்க. ஈக்விட்டி எவ்வளோ இருந்திருக்கு? 80% இருந்திருக்கு. So 11,80,000 divided by 80% gives me 14,75,000 rupees. Yes or no? If the company is going to spend in excess of 40, and already 14,75,000 இருக்கு, இதை தாண்டியும் நான் செலவு பண்ண போறேன் அப்படின்னா I will have to issue new shares. Yes. So now what will be the cost of issue? Cost of issue is very simple and straightforward. Dividend இப்பதான் calculate பண்ணோம். எவ்வளோ? 11.8. Market price, they have told you that you can issue it at 200 rupees. So 11.8 by 200 plus growth will be same அப்படின்னு சொல்லிட்டாங்க. So how much will be my cost of equity? 15.9%. So அதே proportionல debentures 8.33 தான், preference share அதே 12% தான், equity மட்டும் 15.9 calculate பண்ணி என்னோட புது marginal cost of capital எவ்வளோ? 14.57%. This is how you solve the sum where different sources of issue are there and the marginal cost of capital is asked in the examination. Yes, are we clear? Yes, super. So now next we have two more sums that we have to solve. What are those two sums? One is question number 13, book value versus market value. So let us directly go to question number 13 where we cover book value versus market value. So question number 13, we have to solve. The capital structure of RB Limited as on 31st March 2022 as per its balance sheet is as follows. Equity shares of rupees 10 each, 25 lakhs. So that means I have 2,50,000 equity shares. If at all it is required somewhere, let us be ready with it. இது எங்கேயுமே 3 கிடையாது, it is rupees. அதுதான் 3 டைப் ஆயிருக்கு. It is a typo, sorry. So 10% preference shares of rupees 100 each, 5 lakhs. So that means 5,000 preference shares. Retained earnings 5 lakhs. 13% debentures of rupees 100 each to 20 lakhs, which means 20,000 debentures are there. Market price of equity is rupees 350 per share. Expected dividend is rupees 3 per share. Dividend is expected to grow at 8%. Preference shares are redeemable after 8 years and the current market price is 80 per share. Debentures are redeemable after 5 years and currently selling at 90 per debenture. The tax rate applicable is 35%. Calculate WACC using book value and market value proportions. So KE is very simple. Dividend is 3 rupees. Market price is 50. 350 illa rupees 50 pa. Once again. So 3 divided by 50 plus growth is 8%. So this will give me 14% as cost of equity. Cost of preference capital 10% dividend, which means 100 into 10 is 10 rupees divided by net proceeds is 100. So this will give me 10% as the preference capital. Cost of dividend, cost of debentures, interest is 13 rupees into 1 minus 0.35 divided by 100. So this gives me how much percentage? Okay, so they're doing it this way. All right. So cost of preference capital is equal to preference dividend plus redemption value minus net proceeds divided by n, the whole divided by redemption value plus net proceeds divided by 2. This is another formula, correct? So 10 rupees is the dividend plus redemption value is 100. Now it is trading at 80. For how many years? For 8 years. Divided by 100 plus 80 divided by 2. This gives me 13.89%. Similarly, KD is equal to I into 1 minus T plus RV minus NP by N, the whole divided by RV plus NP divided by, so 13 into 1 minus 0.35 plus RV is 100, net proceeds is 90, it is for 5 years. The whole divided by 100 plus 90 divided by 2, this gives me 11%. So இது ரெண்டுத்தையும் calculate பண்ணியாச்சு. Cost of equity calculate பண்ணியாச்சு. Weighted average cost of capital using book value is straightforward. மேல இருக்கிற நம்பர்ஸை பேஸ் பண்ணி டைரக்டா நான் கால்குலேட் பண்ணிட்டே போயிட்டே இருக்க வேண்டியதுதான். வெரி சிம்பிள். கரெக்டா? நவ் யூசிங் மார்க்கெட் வேல்யூ. மார்க்கெட் வேல்யூனா என்ன பண்ணணும்? ரீடைன் earnings எனக்கு வரவே வராது. So 2,50,000 shares into 50 rupees. எவ்வளவு வரும்? 2,50,000 into 50. 1 crore 25 lakhs. Preference shares. 5,000 shares into 80. எவ்வளோ? 4 lakhs. 20,000 debentures into 90, 18 lakhs. The base money weighted average cost of capital calculate பண்ணேனா, that is weighted average cost of capital using market value proportions. So book value, market value ரெண்டுமே calculate பண்ணிட்டோம். So this is how question number 13 or any question where book value and market value is tested should be solved. Yes, now next is question number 16. 15 actually அது 16 போட்டிருக்காங்க, but let us assume it as 16 itself for us to understand. The financial advisor of Sun Limited is confronted with the two alternative financing plans for raising 10 lakhs that is needed for plant expansion and modernization. Issue 80% of funds with 14% debentures, face value of rupees 100 at par, and redeem at a premium of 10% after 10 years, and balance by issuing equity shares at 33.33% premium. Alternative 2, raise 10% of funds using 8% irrenewable debentures having face value of 100 at par, and remaining by issuing equity shares at current market price of 125. Currently, the EPS is 21. The modernization expansion is expected to increase the firm's earnings before interest and tax (EBIT) by 2 lakhs annually. The firm's condensed balance sheet for the current year is given below. They given you the balance sheet numbers. However, the finance advisor is concerned about the effect that issuing of debt might have on the firm. The average debt ratio for the firms in the industry is 35%. He believes if this ratio is exceeded, the PE ratio of the company will be 7 because of the higher risk. If the firm increases its equity capital by more than 10%, he expects the PE of the company to increase to 8.5 irrespective of the debt ratio. Assuming a tax rate of 25% and target dividend payout under each alternative to be 60% for the next year, growth rate to be 10%, suggest with reason which alternative is better based on each of the following criteria: EPS and market price, financial leverage, weighted average cost of capital, and marginal cost of capital using book value weights. So alternative 1 la equity share capital எவ்வளவு வரும் and reserves and surplus எவ்வளவு வரும்? So alternative 1 la how much money is required? 10 lakhs is required. 10 lakhs la 20% is going to be my equity. Correct? Super. So already என்கிட்ட equity shares எவ்வளவு இருக்கு? 20 lakhs இருக்கு. So now the new equity share capital will be 20 lakhs, which is the existing equity share capital, plus 10 lakhs into 20%. This will be the value of equity share capital that I issue. இதுல share capital கொஞ்சம் இருக்கும், reserves and surplus கொஞ்சம் இருக்கும். கரெக்டா? share capital எவ்வளவு இருக்கும்? 100 rupees இருக்கும் out of 133.33. இந்த 133.33 எப்படி சார் வந்தது? They're saying that the share or face value is 100 rupees. இங்க கொடுத்துட்டாங்க. It is going to be issued at 33.33% premium. So my issue price will be 100 plus 33 1/3%. So 133.33 rupees. So இதை பேஸ் பண்ணி my equity share capital will be 21,50,000. Reserves and surplus 10 lakhs plus in the 10 lakhs into 20% into 33.33 by 133.33. So that gives me 10,50,000 rupees. இப்போ ஒருவேளை alternative 2ல போனேன்னு வச்சுக்கோயேன். Alternative 2ல போனேன் அப்படின்னா how much will be my equity share capital? Equity share capital will be 20 lakhs அப்படியே இருக்கும், plus 9 lakhs will be my equity share capital that I'm going to issue. That will be issued at 125 rupees. So 100 into 125. So 9 lakhs into 100 divided by 125. So 7,20,000. So 27,20,000 will be my equity share capital. இங்க போட்டுக்கிற ஆன்சர் தப்பு, கன்ஃபியூஸ் ஆயிடாதீங்க. Reserves and surplus already 10 lakhs இருக்கு, plus 9 lakhs into 25 by 125. 1,80,000 plus 10 lakhs, 11,80,000. Reserves and surplus தான் equity share capital போட்டு வச்சிருக்காங்க. So 11,80,000 becomes my reserves and surplus. So my capital structure will be 21,50,000 equity, 10,50,000, 15 lakhs 10% debt which I already have. அது தவிர 8 lakhs 14% debentures issue பண்ணுவேன் if it is alternative 1. Total capital employed will become 55 lakhs. Alternative 2 இருந்ததுன்னா equity share capital we have calculated 27,20,000, reserves and surplus 11,80,000, 10% long term debt already இருக்கிற 15 lakhs அப்படியே இருக்கும், 14% debentures எதுவும் கிடையாது, அதுக்கு பதிலா 8% irredeemable debentures will be there for 1 lakh rupees. So total is 55 lakhs. Correct? Now presently my EPS is 21 rupees. Number of equity shares that I have is 20,000. So my total earnings for equity shareholders is 4,20,000. So this 4,20,000 will be after tax. Correct? So my tax is how much? 25%. So 4,20,000 divided by 75% will give you the earnings before tax. Profit before tax is 5,60,000. If existing interest எவ்வளோ? 15 lakhs into 10%, 1,50,000. So my present profit is 7,10,000. Computation of present earnings. So it is 7,10,000. They have given you that after this expansion, EBIT will increase by 2 lakh rupees. So EBIT after expansion will become 9,10,000 rupees. Now let us compare the different metrics. EBIT is 9,10,000 and 9,10,000. Interest on 10% loan, ரெண்டு இடத்துலயும் இருக்கும் 1,50,000. 14% debentures, 8 lakhs into 14% gives you 1,12,000. Here 1 lakh into 8%. Alternative 2 lakh, it gives you 8,000. Profit before tax, we are arriving at tax at 25%. Profit after tax, number of equity shares, எப்படி calculate பண்றோம்? Very simple. 21,50,000 divided by 100 gives you 21,500. 27,20,000 divided by 100 gives you 27,200. These are the number of equity shares. So இதால டிவைட் பண்ணா EPS கிடைக்கும். P ratio என்ன? P ratio already questionல கொடுத்துட்டாங்க. எவ்வளோ? 7 and 8.5. எப்போ 7 எப்போ 8.5 அதுதான் நம்ம கால்குலேட் பண்ண போறோம். So now how much is my debt under alternative 1? இது 3 இல்லப்பா, once again rupees. எங்கெல்லாம் 3 இருக்கோ rupeesனு புரிஞ்சுக்கோங்க, என்ன தப்பா டைப் ஆயிருக்கு. So now sorry from our end. So 15 lakhs plus 8 lakhs, 23 lakhs is alternative 1, and 15 lakhs plus 1 lakh. This is 15 lakh is existing long-term loan, plus 8 lakhs is 14% debentures. Similarly, this is existing long-term loan plus 8% irredeemable debentures. So இது ரெண்டுத்தையும் ஆட் பண்ணா வர amount 16 lakhs. So my total capital employed is how much? 55 lakhs. Debt ratio எவ்வளோ? மேல எவ்வளோ calculate பண்ணிருக்கா? 21 lakhs. 23 divided by 55 gives me 42% approximately. 16 divided by 55 gives me 29% approximately. So change in equity எவ்வளோ? 20 lakhs இருந்தது, இப்போ 21,50,000 ஆயிடுச்சு, 1,50,000. Change in equity under alternative 2, it was 20 lakhs earlier, it has become 27,20,000. So 7,20,000. எவ்வளோ சேஞ்ச் ஆயிருக்கு equity? 1,50,000 divided by 20 lakhs, 7.5% சேஞ்ச் ஆயிருக்கு. இதுவே இங்க 7,20,000 divided by 20 lakhs, 36% சேஞ்ச் ஆயிருக்கு. ஸோ உங்களுக்கு கொஸ்டின்ல என்ன கொடுத்துட்டாங்க? The average debt ratio of the firms is 35%. He believes if this ratio is exceeded, then the PE ratio will become 7. இப்போ இந்த சினாரியோல my debt ratio is greater than 35%. கரெக்டா? So my PE ratio should be 7. ஆனா இன்னொரு கிளாஸும் கொடுத்திருக்கான். என்ன கொடுத்திருக்கான்? If the firm increases its equity capital by more than 10%, he expects the PE will be 8.5 irrespective of the debt ratio. என் debt ratio 35%க்கு மேல இருந்தாலும் ஈக்விட்டியில இருக்கிற சேஞ்ச் 10% விட அதிகமா இருந்துச்சுன்னா, ஈக்விட்டியில எவ்வளவுதான் இருக்கு, 10% விட கம்மியா தான் இருக்கு. ஏன் 7.5 தான் இருக்கு. ஸோ என் பி ரேஷியோ எவ்வளவுதான் இருக்கும், 7 தான் இருக்கும், 8.5 இருக்காது. பட் ஹியர் டெட் இஸ் ஆல்சோ லெஸர், ஈக்விட்டி இஸ் மோர் தேன் 10% இன்க்ரீஸ். ஸோ எவ்வளோ பி ரேஷியோ, 8.5. So EPS into PE ratio gives me market price. Financial leverage is EBIT divided by PBT 1.4 and 1.21. இது எல்லாமே கால்குலேட் பண்ணியாச்சு. இன்னும் weighted average cost of capital கால்குலேட் பண்ணல. அத பண்ணலாம் வாங்க. So first cost of equity. My EPS is 22.6, 20.74. DPS is 60% of EPS. Growth is 10% கொடுத்துட்டாங்க. Market price MPS already calculate பண்ணிட்டோம். So D0 into 1 plus G by P0 gives you 9.43 and 7.76%. Cost of long-term debt, tax benefit உண்டு, அதனால tax minus பண்ணா 7.5%. Here it is irredeemable debentures. Irredeemable debentures என்ன ஃபார்முலா போட்டிருக்காங்க, 14 into 1 minus 0.25 plus redemption value of 110 minus cost of issue minus net proceeds of 100, life of 10 years, the whole divided by 110 plus 100 divided by 2, that gives you 10.95%. Irredeemable debentures க்கு ரொம்ப simple, 8,000 8% into 1 minus tax, so 8% into 1 minus 0.25, 6%. So now what is my weighted average cost of capital? Alternative 1 கடியில my weight is 0.3909. எப்படி சார் weight calculate பண்ணீங்க சொல்றேன், வெயிட் பண்ணுங்க. So alternative 1ல 21,50,000 is my equity share capital. 21,50,000 divided by 55 lakhs gives you 0.3909. So அதுதான் இங்க போட்டிருக்காங்க. Cost is 9.43, multiply பண்ணா 3.69. Reserves and surplus is 0.1909. Reserves and surplus க்கும் ஈக்விட்டிக்கும் ஒரே காஸ்ட் தான் வரும். So 9.43 becomes 1.8. இதே மாதிரி calculate பண்ணா you arrive at weighted average cost of capital of 9.12 and 7.66. கரெக்டா? சூப்பர். Now marginal cost of capital. Marginal cost of capital என்ன, இன்க்ரீஸ் ஆன அமௌண்ட்ஸுக்கு மட்டும் நான் கால்குலேட் பண்ணுவேன். ஸோ எவ்வளோ இன்க்ரீஸ் ஆயிருக்கு, 1,50,000 இன்க்ரீஸ் ஆயிருக்கு, ரிசர்வ் அண்ட் சர்ப்ளஸ் 50,000 இன்க்ரீஸ் ஆயிருக்கு, 14% டிபென்ச்சர்ஸ் 8 lakhs இன்க்ரீஸ் ஆயிருக்கு. கரெக்டா? ஸோ மை வெயிட் வில் பி 0.15, 0.05 and 0.80. காஸ்ட் அதே தான். ஸோ மை மார்ஜினல் காஸ்ட் ஆஃப் கேபிட்டல் இஸ் 10.65%. Similarly here my cost equity has increased by 7,20,000. Reserves and surplus has increased by 1,80,000. Irredeemable debentures has increased by 1 lakh. So if I calculate marginal cost of capital, it comes to 7.58%. Now I should put a summary. Summary என்ன சொல்லுது, alternative 1ல EPS 22.6, 20.74, 158.2, 160, 176.29, 1.4043, 1.2101. WACC is 9.12, 7.66. MAC is 10.65, 7.58. ஸோ இதுல இருந்து என்ன தெரிய வருது, எனக்கு ஆல்டர்னேட்டிவ் 1 எங்க மட்டும்தான் பெனிஃபிஷியலா இருக்கு, இபிஎஸ் கிரைட்டீரியால மட்டும்தான் ஆல்டர்னேட்டிவ் 1 பெனிஃபிஷியலா இருக்கு. அண்டர் ஆல் தி அதர் கிரைட்டீரியாஸ் ஆர் ஆல் தி அதர் கிரைட்டீரியன், வாட் இஸ் பெனிஃபிஷியல், மை ஆல்டர்னேட்டிவ் 2 இஸ் பெனிஃபிஷியல் பிகாஸ் இட் கிவ்ஸ் மீ பெட்டர் numbers. என்னோட காஸ்ட் கம்மியா இருக்கு, என்னோட லீவரேஜ் கம்மியா இருக்கு. So that is my conclusion. If alternative 1 of financing will be preferred under the criteria of EPS, whereas alternative 2 will be preferred for all the other criterion. Criteria order plural is criterion. Yes, or rather singular is criterion. Are we clear? With this, your cost of capital revision is over. If you solve these sums, this gives you enough clarity around different concepts that are there from cost of capital. You'll be able to get a good number of marks in your examination for all the sums that are asked out of cost of capital. One generic advice for any FM chapter, please maintain a list of formulae written by yourself. நீங்களா list of formulae எழுதி வச்சிருந்தீங்கன்னா better. என்கிட்ட கிளாஸ் படிச்ச ஸ்டூடெண்ட்ஸ், if you're watching this video, you already know that the first thing that I've told you in your first ever class was to maintain an index of formulae. Yes or no? Index of formulae உங்களை மெயின்டைன் பண்ண சொல்லி ஆல்ரெடி நான் சொல்லியிருக்கேன். So that is what is going to be of significant help on the day before exam. With this, cost of capital chapter is over. Let us meet another day to discuss another chapter from FM in this FOCAS 30 revision series. Yes, until then, Tata, bye bye. See you later. Happy studying.